Hello guys, welcome to our KuCoin YouTube channel. After having learned about the definition of primary trends and secondary trends in last tutorial, today this video will bring you more practical details and practically complete this theory. Subscribe to our KuCoin YouTube channel and smash that notification bell to follow our future updates. Now let me introduce some contents. Today we will discuss some new terms: support, resistance, retracements, and Fibonacci. Also, some trading tips will be added after introducing these terms. With the knowledge I've told in last tutorial, I'm sure you will very quickly understand this video. So if you have any questions, please leave us comments below. Shall we start? So what is support and resistance? Firstly, please look at the picture that I've shown in the last tutorial. You can easily find that the market is bullish and it contains primary trends and secondary trends, right? Now I intend to add some new terms in this picture. Voila! You can figure out that the high points and low points are turning into resistance levels and support levels. Now we can imagine that price is a bull, bounces between the resistance levels and support levels. The reason why the price is supported at some level and why the price is resisted at some level are that if the price ascends to some level, the people with short position will dominate the market and the price then drops. However, if the price descends to some level, the people with long position, which is stronger than that I mentioned before, will dominate the market again and pushes the price into a higher resistance level. Price action from the resistance level to support level in the bullish market or from the supported level to resistance level in the bearish market is called retracement, which is also called the secondary trend that I mentioned before. The retracement is a sign that we can make arbitrage based on identifying the market is bullish or bearish by Dow Theory. In this way, we need a threshold that helps us identifying the entry prices. Fibonacci has given us a set of percentages of retracements. But before we talk about that, we should know that Fibonacci believes that within retracing 61.8 of price between resistance levels and support levels, the whole trend is healthy. However, if the trend retraces more than 61.8% of price, it is highly possible to change. Also, he believes that 23.8%, 38.2% are very exact ratios that we can use to enter the market. Don't worry, I will explain that in detail in next page. So how to trade cryptos by using supports, resistance, retracements, and Fibonacci ratios. From this page, I have simplified the primary trend for you. And if you have identified primary trend, you must wait the appearance of secondary trends, because this is the price you intend to buy. The entry price depends on the price patterns that we will discuss in candlestick charts tutorial later. But in this picture, it is highly recommended to use the price calculated from Fibonacci ratios. After that, the stop loss price is necessary to set up before you enter the market. From Dow Theory, if the retracement moves at supported level price, it is highly possible to change. In this way, the stop loss prices should be set at the supported level prices. The take point price can be set as the resistance level price if the trend is going up. Also, you can set it far more away from the entry price before the trend is changed, such as at the orange circle. At the end of this content, I made a summary for you, and this time I will explain it with a picture. This video offers you 3 new terms. Support is like selling, and resistance is kind of flow during the price trend, and the retracement is secondary trend, and it is highly possible to be 23.8% and 38.2% of the price between the resistance level and support level. Fibonacci create three kinds of ratios, and the entry price could calculate it from these ratios, and other price patterns could determine the entry price. And this we will discuss later. In this picture, you can clearly see that the stop-loss price is set at the supported level price, and take profit price is set at least at the resistance level price. Next session, we will discuss about the candlestick-related parts, and I will make some brief introduction to some price patterns. Okay? So if you have any questions or just want to give us some feedbacks, please don't hesitate to leave us some comments. See you next time.